There is a reason most traders never reach consistency. It's not because they lack skill or knowledge or opportunity. It's because they lose themselves in the moment when the market finally moves their way. They forget their plan. They forget their discipline. They forget the simple truth that a winning trade is only real when you have the courage to take something off the table. In this video, we're going to explore the psychology behind scaling out, not as a tactic, not as a strategy, but as a way of thinking that transforms your trading mind. A way of thinking that protects your RR, protects your clarity, and protects the version of you that's fighting so hard to grow beyond emotional decision-making. Welcome to Mind Over Markets, and welcome to a deeper understanding of the inner world that shapes every trade you take. Most traders don't lose because their strategy is wrong. They lose because their mind is unprepared for what the market truly demands. They lose because they never learned how to end a trade. They never learned how to take profit without guilt. They never learned how to protect their risk to reward without hesitation. And they never learned how to detach their identity from a single candle, a single move, a single trade. The truth is simple. You are not fighting the market. You are fighting yourself, your fear, your greed, your need to be right, your desire for the perfect exit that never existed and never will. Take a moment and breathe. Not the shallow breath you take when price moves against you, but a deep breath that reminds you of something we all forget. This is a probability game, not a prediction game, not a hero game, not a game of guessing the last tick before price turns. A probability game where survival is the only path to mastery. If you look closely, you'll notice something. Most losses don't come from bad entries. They come from bad exits, from hesitation, from watching your trade go from green to red while you whisper, just a little bit more, just one more push, just a tiny pullback, and then suddenly you're no longer managing a winning trade. You're begging to break even. And that shift from confidence to desperation is the moment you lose your edge. So let me tell you a truth that most traders never want to hear. The moment you are up, your brain becomes your enemy. It will offer you fantasies. It will whisper promises. It will show you imaginary profits that don't exist. It will seduce you into holding longer than your plan. And when the market snaps back, as it always does, the same brain that begged for more will punish you for not taking what you already had. It's a cycle, a loop, a psychological trap you keep walking back into. And this is exactly where scale-out logic begins. Not on a chart, not with indicators, not with trend lines. Scale-out logic begins in the mind. It begins in that fragile moment when your profit is real, but your emotions are louder. When your plan says take some, but your ego says hold everything. When your risk to reward is already achieved, but the voice inside you whispers, what if you catch the entire move? You know that voice. You've heard it 1,000 times, and every time you listen to it, your outcome ended the same way you watched your unrealized profit disappear into nothing, into regret, into self-blame, into the silent anger that no one sees but every trader knows. Scale-out logic exists for one reason: to protect you from yourself, to protect your equity, to protect your psychology, to protect your ability to stay consistent in a game designed to emotionally destroy you. When you scale out, even a small portion, you're not being weak. You're not being conservative. You're not leaving money on the table. You are doing something far more powerful. You are taking control. You are grounding your emotions. You are transforming fear into logic. You are reminding your mind that this is not gambling. This is risk management. People misunderstand scale out. They think it's about optimizing profit. It's not. Scale out is about protecting your RR, about saving your psychology, about making sure your next decision is made from clarity, not panic, about ensuring that no single trade has the power to break your confidence. Because confidence isn't built by winning big. Confidence is built by not giving it back, by keeping what you've earned, by preserving the small wins that compound into control, and the control that compounds into mastery. And mastery always begins the same way, with a choice to protect yourself even when your emotions want something else, a choice to act from logic instead of impulse, a choice to scale out not because you fear missing out, but because you respect your plan. Scale out logic is self-respect in action. It is discipline made visible. It is the bridge between chaos and consistency. And every professional trader knows this truth. You cannot protect your capital until you learn to protect your mindset. And you cannot protect your mindset until you learn the art of letting go. Letting go of perfection. Letting go of prediction. Letting go of the fantasy of catching the full move. Letting go of the illusion that you can outsmart randomness. Because you don't need to outsmart the market. You just need to stop outsmarting yourself. When you understand this scale out becomes more than a tactic. It becomes a philosophy, a mindset, a way of thinking that keeps you alive in a world where most burn out long before they ever mature as traders. This is where we begin, with the truth that your exits matter more than your entries, with the understanding that scale out is not a technique, but a transformation of the mind, and with the realization that your greatest enemy has never been the market. It has always been the part of you that refuses to take profit when profit is already in your hands. If you truly want to grow as a trader, you must first understand the emotional battlefield that takes place inside you the moment a trade begins to move in your favor. Because the irony of trading is simple winning is often more stressful than losing. A loss is familiar. It's painful but predictable. You know what it feels like. You've felt it many times before. It's a wound you can anticipate. But a win creates confusion. A win awakens a different kind of fear. Not the fear of losing money, but the fear of losing what you've gained. The fear of watching green numbers turn red. The fear of making the wrong decision about how much to hold and how much to take. And this fear of losing a win has destroyed more traders than any losing streak ever could. Because when you're winning, your brain starts whispering stories. Stories about how far price could go. Stories about how this might be the trade that finally changes everything. Stories about turning one win into something extraordinary. But extraordinary outcomes come from ordinary discipline, from doing the simple things right, from protecting what you have before dreaming about what you might have. This is why scale out matters. Scaling out is the moment you say, I choose certainty over fantasy. I choose logic over emotion. I choose consistency over greed. And that choice, that single choice to lock in part of your profit, reshapes your psychology. Because once you've taken some off the table, you start breathing differently. Your shoulders relax, your thoughts slow down, your decisions become clearer. Your heart rate stabilizes. The trade no longer owns you. You've shifted from survival mode into observation mode, from feeling threatened by the market to simply watching it unfold, from reacting to responding. That shift is everything. Because the greatest damage in trading comes from decisions made in a state of emotional tension, from holding your breath while hoping the market moves just a little more, from tightening your jaw every time price pulls back a few ticks, from staring at unrealized profits as if looking at something fragile, something that could disappear with the next candle. Scaling out frees you from that tension. It creates psychological space. It unfolds a mindset where you are no longer desperate to squeeze every pip, every point, every tick out of the market. And without desperation, your clarity returns. When you have clarity, you see what other traders miss. You notice structure. You notice weakness. You notice momentum shifting. You notice the story price is telling instead of forcing your own story onto it. Scaling out is not about taking smaller profits. It's about creating a mental environment where rational decisions can exist. Because no trader makes good decisions when their entire position is on the line. When one reversal can flip their mood, their heartbeat, their self-belief. Professional traders know this. They scale out not because they doubt their analysis, but because they respect their emotions. They respect the fact that the human mind is not built to manage the stress of holding large positions during volatile moments. They respect the psychology of self-preservation. Scaling out is structured self-preservation. It is the antidote to the emotional spiral that begins when you are up on a trade, but terrified of giving it back. Because fear and greed work together. Fear says, what if it reverses? Greed says, what if you miss the big move? And you get stuck between them, paralyzed, unable to act until the market forces your hand by taking away the very thing you were afraid to lose. Scale out breaks this paralysis. By taking partial profit, you ground yourself. You regain control. You remove the emotional fog. You shift the narrative from I might lose everything to I've already secured something. This something, no matter how small, is the foundation of consistent trading. Because consistency isn't built on catching massive moves. Consistency is built on managing emotions in ordinary moves. Scaling out is a decision to prioritize long-term survivability over short-term fantasy. A decision to stay in the game rather than risk getting knocked out. A decision to value clarity above ego. And ego is the enemy of good exits. Ego wants you to be perfect. Ego wants you to catch the exact top. Ego wants you to catch the exact bottom. Ego wants you to prove that your analysis was flawless. Ego wants you to hold until the very last moment so you can say, I nailed it. But trading is not about nailing it. Trading is about managing it. Managing risk, managing expectation, managing behavior, managing emotion. Scale out is humility in action. It's the acknowledgement that you do not need perfection to be profitable, that you do not need certainty to be consistent, that you do not need to capture everything to capture enough. Enough is the key word. Enough keeps you grounded. Enough keeps you patient. Enough keeps you rational. Enough keeps you safe. Scaling out is the art of taking enough and letting the rest happen as it may. And when you embrace this mindset, your trading transforms. You stop chasing perfect trades. You stop demanding perfect exits. You stop needing the market to reward you with huge wins just to validate your ego. You start trading with clarity. You start trading with control. You start trading with a level of emotional detachment that feels almost unfair compared to the panic-driven decisions you used to make. Scale out becomes your anchor, your stabilizer, your psychological safety net. Not because it guarantees profit, but because it guarantees discipline. And discipline is worth more than any single trade you will ever take. There is a moment in every trade that decides everything. A moment that separates impulsive traders from intentional traders. A moment that determines whether you act with discipline or collapse into instinct. It is the moment your trade reaches the first level where your plan said you would take profit, a level you marked with logic, a level you defined before emotions entered the trade, a level calculated with risk-reward and structure in mind. But when price reaches that level, your plan begins to fade. Your emotions begin to rise. Your mind starts telling stories again. That's too early. It's moving strong. It's going much higher. Just wait. You can get more. And in that moment, your mind rewrites your plan to fit your hope. Hope is not your ally. Hope is the most expensive illusion in trading. Hope tells you to hold. Hope tells you to ignore risk. Hope tells you to trust the candle side. When the candle has never promised you anything, the candle doesn't care who you are. The market doesn't remember your trade. Price doesn't owe you direction. But your emotions, they convince you otherwise. They convince you that you're seeing something special, something meaningful, something that justifies breaking your rules. And that is why traders struggle. Not because they lack knowledge, not because they have weak strategies, but because they rewrite their rules under emotional pressure. Scaling out is a protection against this rewriting, a safeguard against your future self, a commitment made in advance that shields you from the version of you who panics, hopes, hesitates, or becomes greedy in the heat of the moment. When you scale out, you anchor yourself to reality. Reality says, I don't know how far this trend will go. Reality says reversals can happen instantly. Reality says profit is only real when you take it. Reality says the goal is consistency, not perfection. This is why professional traders scale out. Not because they can't hold big runners, but because they understand that big runners are rare and discipline must work even on the ordinary trades. Ordinary trades win the game, not the extraordinary ones. You cannot build a career waiting for extraordinary outcomes, but you can build one by consistently managing ordinary ones with extraordinary discipline. Scaling out is that discipline. It is an agreement with yourself that says, I will not let a winning trade turn into a losing trade. I will not let greed rewrite my logic. I will not let the desire for more destroy what I have already earned. Because the truth is this, when you scale out, something quiet but powerful happens inside you. You stop seeing the trade as a single moment that must be perfect. You stop seeing it as a yes or no outcome. You stop seeing it as a gamble. The trade becomes a sequence, a journey, a collection of decisions that each carry value. You no longer obsess about catching the top. You no longer panic at every pullback. You no longer tie your self-worth to whether this one trade becomes a home run. Instead, you begin to see your trades the way professionals do, as probability events, where emotions must be removed and logic must take the lead. And when logic leads, clarity follows. You notice that you don't feel the same tension when price pulls back. You don't feel the same panic when volatility rises. You don't feel the same urge to interfere with the trade just because candles move quickly. Scaling out softens the emotional spikes. Instead of your heart dropping when the market retraces, you accept it. Instead of feeling robbed when you miss a bigger move, you feel grounded. Instead of regretting what could have been, you appreciate what is. Because once part of your profit is secured, your relationship with the trade changes. You are no longer attached. You are observing. You are present. You are calm. Calm is your superpower. Calm is what gives you perspective. Calm is what allows you to see opportunities without forcing them. Calm is what prevents you from sabotaging your own work. Emotional traders look for perfect trades. Calm traders look for consistent ones. And consistent traders survive long enough to become great. You must ask yourself, do you want to feel right or do you want to be consistent? Because scale-out decisions are often the difference between these two paths. Traders who want to feel right hold everything. They chase validation. They hope the market rewards their courage. They want to prove something to themselves, to others, to their ego. Traders who want to be consistent scale out. They protect, they secure, they follow the plan they wrote when their mind was clear. Which version of you Do you want to be the one controlled by impulse or the one led by intention? When you choose intention, scale out becomes natural. It becomes obvious. It becomes the quiet truth behind every stable equity curve you've ever seen. The curve doesn't rise because traders take massive wins. It rises because traders avoid emotional collapses. It rises because traders preserve gains instead of gambling them. It rises because traders secure what they can and allow the rest to unfold without attachment. Scaling out is the emotional midpoint where fear dissolves and clarity emerges. It is the moment your mind aligns with your strategy. It is the moment your psychology supports your future instead of sabotaging it. And that is why you must learn this truth. To protect your risk to reward is to protect your mind. To protect your mind is to protect your longevity. And to protect your longevity is to protect your potential. The market rewards those who protect their potential. There comes a time in every trader's journey when they realize something painful yet liberating. Their worst losses were not caused by the market, but by the moments when they refused to take what the market already offered. When you look back at your deepest drawdowns, your most frustrating weeks, your most emotionally draining trades, you'll notice a pattern. You were up, you had profit, you had opportunity, you had clarity, and then something inside you said, hold, wait, don't settle. You can get more, but more never came. Only regret did. And what hurts the most is not the money you lost, it's the knowledge that you disrespected your own plan. You ignored the rules your wiser self had created. You believed emotion instead of logic. You traded hope instead of process. This is the psychological cost that Scale Out is designed to eliminate. Not by magically improving your trades, but by protecting you from the emotional collapse that follows unmanaged wins. Because losing money is one thing, but losing control is something far more dangerous. When you scale out, you reclaim control. You stabilize your internal state. You interrupt the spiral before it begins. This is what emotional mastery looks like in trading. Not being fearless, not being emotionless, not being perfect. Emotional mastery is the ability to act with intention even while emotions exist, to remain steady even when candles move violently, to keep your plan even when your mind wants to rewrite it. Scale Out is an anchor you throw into the sea when the waves of greed and the currents of fear begin to pull you away. It keeps you grounded in a market designed to uproot you emotionally. And once you understand this, a deeper truth emerges. Scale Out is not a tool to maximize profit. It is a tool to maximize mental clarity. Because clarity is what allows you to see the market as it is not as you want it to be. Clarity dissolves ego. Clarity softens fear. Clarity silences the internal noise. Clarity brings you back to the present moment. With clarity, you recognize that every trade is just one step in a long journey, one iteration, one sample from a distribution far larger than your ego can accept. And once you stop treating each trade as a life or death event, your perspective changes. You become calmer. You become more objective. You become patient. You become disciplined. You stop forcing trades. You stop chasing losses. You stop demanding certainty from a market that offers none. You stop looking for perfection in a game defined by imperfection. Scale Out reinforces this mindset by reminding you that your job is not to extract everything. Your job is to extract enough. Enough to stay consistent. Enough to stay confident. Enough to keep showing up tomorrow, next week, next month, next year. Because longevity is the true advantage in trading. Not bravado, not ego, not oversized wins that inflate your pride and destroy your discipline. Longevity is built from thousands of small decisions, each executed with intention, each reinforcing discipline, each reinforcing self-respect. Scaling out is the embodiment of that self-respect. It is the moment you say, I value my process more than the emotional thrill of holding everything. It is the moment you say, I trust the long game more than the short-term fantasy. It is the moment you say, I choose sustainability over the illusion of perfection. And once you internalize this, you begin to trade differently. You begin to think differently. You begin to feel differently. The fear you once carried starts to fade. The desperation you once felt starts to weaken. The impulsiveness you once battled starts to lose power. In its place grows something stronger, a quiet confidence, a steady presence, a sense of control that does not depend on the outcome of a single trade. This is the internal transformation that scale out creates. Not instantly, not dramatically, but gradually, with every disciplined exit, with every partial profit, with every moment you choose clarity over chaos. Scaling out teaches you that consistency is not found in predicting where price will go. It is found in managing yourself as price moves. It teaches you that you can't control the market, but you can control how much of your position is exposed to it. It teaches you that you don't need to capture the entire move, because capturing part of the move again and again is what builds a trader's future. And perhaps most importantly, scaling out teaches you that real strength in trading is not measured in how long you hold, but in how intentionally you act. The market rewards intentional traders. It punishes impulsive ones. It elevates those who manage emotion. It destroys those who ignore it. Scaling out is your bridge from emotion to intention, from chaos to structure, from fear to clarity, from gambler to professional. And when you cross that bridge enough times, you become something rare, a trader with emotional resilience, a trader with psychological balance, a trader who understands that consistency grows from small, repeatable habits, not from heroic predictions. Scaling out is one of those habits, simple, powerful, transformative. And as this truth settles within you, you begin to realize something profound. You never needed the market to give you more. You only needed to stop taking less than what your discipline deserved. There is a misconception among traders that scaling out is a compromise, that it is something you do when you lack confidence, that taking partial profits somehow means you don't trust your setup or your analysis or your ability to hold. But that belief comes from ego, not wisdom, because wisdom knows that the market is unpredictable. Wisdom knows that strength is not found in holding blindly, but in adapting intelligently. Wisdom knows that there is nothing more powerful than turning uncertainty into calculated structure. When you scale out, you are not compromising. You are refining. You are sharpening. You are adapting your position to the ever-changing reality of market movement. This is why the best traders in the world do not hold full size through the entire move. They reduce, they adjust, they adapt, they respond, they evolve with each stage of the trade. Because a trade is not a single event, it is a sequence of evolving conditions. Conditions that start one way and end another. Conditions that can shift from confidence to caution in a single candle. Scaling out honors this evolution. It recognizes the simple truth that no trend moves in a straight line, and no profit is guaranteed until it is taken. And yet, so many traders resist it. They resist because of greed. They resist because of fear. They resist because of a fantasy that says, if I hold everything, I might finally get the big one. But here's the paradox that every mature trader discovers. The big one often comes only after you stop trying to catch it. Because when you scale out, something powerful happens. You give the market room to breathe without letting it suffocate your emotions. You give your trade space to develop naturally without forcing your expectations onto it. You allow the possibility of a larger move without depending on it. This is the foundation of calm trading. When you scale out, you become less reactive. You stop needing the market to reward you instantly. You stop clinging to every tick as if your identity depends on it. You stop obsessing over maximizing every dollar. Instead, you start focusing on what truly matters, protecting your edge, protecting your consistency, protecting your ability to show up tomorrow without emotional scarring. Because emotional scars are the true cost of ignoring scale out. A trade that reverses violently after you refuse to take profit does not just damage your account, it damages your psychology. It buries you in regret. It makes you distrust yourself. It triggers revenge trades. It weakens your discipline. It plants fear in the parts of your mind meant to stay calm. That fear follows you into the next trade, into the next week, into every decision you make. Fear lingers long after the loss is gone. Fear becomes the quiet voice that tells you to close winners too early and hold losers too long. Scaling out is not merely about taking money, it is about preventing psychological wounds that ruin your future performance. When you scale out, you strengthen trust in your own decisions. You reinforce the belief that your rules matter. You prove to yourself that you can act with discipline even when emotions are loud. This self-trust is the foundation of mastery. Without it, you trade with hesitation. With it, you trade with clarity. And clarity is a trader's greatest weapon. Clarity says, I don't need to guess the top. Clarity says, I don't need to predict the perfect exit. Clarity says, I only need to follow the structure that keeps me consistent. This is the mindset that allows professional traders to survive the long game, not because they catch every major move, but because they protect their psychology on every ordinary move. Scaling out transforms your relationship with the market. It stops being you against the chart. It stops being you chasing perfection. It stops being you wrestling with uncertainty. Instead, it becomes a collaboration between your logic and the market's natural rhythm, a balance between your plan and price action, a harmony between discipline and opportunity. When you scale out, you honor the idea that no one knows how far a trend will go. Not you, not institutions, not algorithms, not analysts, no one. But you don't need to know. You only need to manage risk, manage expectation, manage size, manage emotion. And that is exactly what scaling out does. It turns the unknown into something manageable. It takes the chaos and gives it structure. It takes the emotional turbulence and gives it balance. Because when your position size decreases, your emotional load decreases with it. Your decisions become lighter. Your judgment becomes sharper. Your patience becomes stronger. Your discipline becomes easier. Heavy positions create heavy emotions. Lightened positions create clearer minds. Scaling out lightens the mind. It frees your attention. It strengthens your composure. It elevates your mindset from short-term anxiety to long-term clarity. And long-term clarity is the foundation upon which successful trading careers are built. Scaling out is not a tactic. It is not a shortcut. It is not a trick. Scaling out is psychological mastery in practice. It is emotional intelligence applied to the chart. It is self-discipline expressed through execution. It is the embodiment of maturity, patience, and professional behavior. It is choosing stability over thrill. It is choosing structure over chaos. It is choosing longevity over dopamine. And when you make that choice consistently, the market begins to respond differently to you. Not because the market has changed, but because you have. You begin to see what others cannot. You begin to act in ways others won't. You begin to separate yourself from the 95% who trade emotionally. And that separation is where growth begins. At some point in your development as a trader, you begin to recognize that the market does not reward the bold. It rewards the balanced. It rewards those who understand that every trade exists within a dynamic landscape, a landscape where probabilities shift, momentum changes, and sentiment evolves with every passing candle. This is why rigid thinking destroys traders. The belief that a trade must play out fully just because you entered it with confidence is a psychological trap. Confidence at entry does not guarantee clarity at exit, and clarity at exit does not come from prediction. It comes from management. Scaling out is management. Management of risk, management of expectation, management of emotion, management of uncertainty. But deeper than all of this scaling out is the management of the inner self, because the inner self is the real battlefield. The market is only a mirror reflecting the chaos within you. Every spike triggers your impatience. Every retracement tests your discipline. Every false breakout exposes your fear. Every trending candle awakens your greed. And if you never learn to interpret your own emotional signatures, you will never master the art of exiting well. Exits require emotional intelligence. They require the humility to accept that you will never time them perfectly. They require the patience to let the market unfold without forcing your expectations onto it. And they require the wisdom to know when to step aside and protect what you already have. Scaling out embodies that wisdom. It says, I cannot control the future, but I can control my exposure. I cannot guarantee the full move, but I can guarantee a partial win. I cannot eliminate uncertainty, but I can eliminate regret. Regret is one of the most corrosive emotions for traders. It weakens confidence, it fuels revenge trades, it distorts judgment, it makes you chase what is already gone. And the most painful regret of all is not a losing trade. It is a winning trade that you turned into a loss because you refused to take what was offered. Scaling out prevents this self-inflicted wound. It transforms a potential regret into a controlled outcome. It shifts your emotional state from fear of losing to acceptance of what you've secured. And acceptance is the key to psychological stability. When you accept partial profit, you accept that you do not need the entire move to succeed. When you accept that uncertainty is normal, you stop demanding perfection. When you accept your limitations, you create space for clarity. Clarity grows when ego dissolves. The ego says, I must hold everything. I must capture the full move. I must be right. I must win big. But clarity says I must follow my plan. I must protect my edge. I must stay consistent. I must remain calm. These two voices compete inside you on every trade, and whichever voice wins determines whether you act from discipline or from impulse. Scaling out amplifies the voice of discipline. It gives structure to your process. It gives stability to your emotions. It gives predictability to your results, because the moment you take partial profit, you shift from reactive mode to centered presence. You shift from emotional tension to grounded observation. You shift from needing the market to validate your decision to simply managing what is in front of you. And this shift changes your entire relationship with trading. You start to realize that profit is not the goal. Control is. Emotional control, risk control, position control. Profit is the byproduct of consistent control. Loss is the byproduct of emotional chaos. Scaling out reduces chaos. It calms the noise. It stabilizes your heartbeat. It softens your fear. It quiets your greed. And in that quieter state, you can finally see the market clearly. You can finally act with intention. You can finally execute as the trader you aspire to be, instead of the trader your emotions try to force you into becoming. There is a moment, and every trader has felt it, when scaling out gives you an almost meditative detachment. When you reduce size, you gain clarity. When you gain clarity, you see the chart differently. When you see the chart differently, you stop reacting blindly. You start responding wisely. You start seeing patterns. You start seeing structure. You start seeing opportunity without the emotional fog. Clarity turns you into a better trader without changing your strategy, only your psychology. And once you taste this clarity, you begin to realize that the trader you have always wanted to become is not created by new indicators, new systems, or new market secrets. That trader is created by mastering your internal state, by shaping your emotional responses, by learning to detach from outcomes, by learning to let go of the part of you that wants everything at once. Scaling out teaches this letting go. It teaches surrender. Not surrender to the market, but surrender to the truth that no one can control the market. You can only control yourself. And controlling yourself is the cornerstone of mastery. Scaling out is the practical expression of that inner control. A small action with massive psychological impact. A modest adjustment with profound long-term consequences. Scaling out is not just a trading tactic. It is a mindset, a philosophy, a way of moving through uncertainty without losing your balance. It says, I will not sacrifice my peace for the possibility of a bigger win. I will not suffer emotionally for the sake of ego. I will take what is offered and let the rest unfold without attachment. This is emotional maturity. This is trading wisdom. This is the foundation of long-term success. And as you internalize this truth, you begin to see that scaling out is not merely a technique, it is a form of self-respect. Because protecting your profits is protecting your future, and protecting your future is protecting yourself. There is a moment in every trader's evolution when they finally understand that trading is not about prediction, it is about protection. Not about maximizing every trade, but about preserving the trader. This realization doesn't arrive in your early days of trading. It doesn't appear when you're excited, when everything feels new, when you're still captivated by the fantasy of catching massive moves. It arrives later. After the sleepless nights, after the blown accounts, after the emotional exhaustion that comes from watching profits evaporate because you refuse to take them when they were in your hands. It arrives after you've felt the sting of turning a winning week into a losing one because you chased one more trade. After you felt the shame of breaking your rules for the 100th time. After you felt the frustration of knowing exactly what you should have done and still doing the opposite. This is when the truth becomes unmistakable. You don't need more winning trades. You need fewer self-inflicted losses. And that's exactly what scale out prevents. Because scale out is not just about locking in profit. It is about interrupting the cycle of self-sabotage that keeps traders stuck in emotional loops they cannot escape. Every trader has lived that loop, the loop where a trade moves in your favor, you feel the rush of possibility, you imagine the huge win. And then you watch it reverse slowly at first, then violently until the green fades and the red appears, and you sit there staring at the screen in disbelief. You knew where you should have taken profit. You marked the level. You planned the exit. You had the signal, but you didn't act. Not because you lacked skill, but because you lacked emotional readiness. Scale out builds that readiness. It gives you a structured way to handle the rising pressure of an open profit. It gives you a rule to follow when your emotions try to take control. It gives you a way to secure something before you lose everything. And over time, this simple act rewires your trading psychology. You begin to trust your exits. You begin to trust your process. You begin to trust yourself. Self-trust is not built in winning trades. It is built in disciplined trades. It is built in the moments when you take partial profit, even though greed whispers, hold a little longer. It is built in the moments when you protect your RR, even though hope tells you maybe it will explode upward. It is built in the moments when you choose stability over excitement. These moments shape you. They strengthen the part of you that wants to grow and weaken the part of you that wants to gamble. They fortify the part of you that plans and soften the part of you that panics. They nurture the part of you that stays disciplined even when discipline is uncomfortable. Because discipline is uncomfortable. It always has been. It always will be. If discipline felt good, everyone would have it. But discipline is the ability to act with intention, even when your emotions pull you in a different direction. Scaling out is disciplined intention. It is the moment you say, I choose consistency over excitement. I choose process over impulse. I choose the long term over the short term thrill. Thrill is temporary. Consistency is permanent. Thrill fades the moment the candle closes. Consistency stays with you in every trade, every session, every year. Scaling out builds consistency through repetition, through choices made every day, through actions taken even when they feel small, even when they feel insignificant, even when they feel inconvenient. Because the truth is simple. The habits that shape your trading career are rarely dramatic. They are subtle. They are quiet. They are the decisions no one applauds, no one notices, no one praises. But these decisions change everything. The decision to take partial profit when your rule tells you to. The decision to lighten your size when volatility increases. The decision to protect your trade when your ego wants to push further. The decision to say, I will not let this turn into a loss when it is already a win. Each decision is a vote for the trader you want to become, a vote for the discipline you seek, a vote for the consistency you crave, a vote for the emotional control that separates professionals from everyone else. And the more votes you cast, the stronger that trader becomes, the more natural discipline feels, the more instinctive, clear thinking becomes, the more effortless your execution becomes. Scaling out gradually removes the emotional chaos that once defined your trading. It replaces uncertainty with structure. It replaces fear with clarity. It replaces hope with logic. And in that new space, that space created by discipline, you begin to see the market differently. You stop chasing. You stop forcing. You stop rushing. You stop fighting. You start observing. You start planning. You start flowing with the rhythm of price. You start acting instead of reacting. Because the real transformation of scale out is not numerical. It is psychological. It is not about the money you take. It is about the chaos you eliminate. It is not about maximizing a trade. It is about maximizing your clarity. It is not about capturing every opportunity. It is about protecting your longevity. And longevity is the true currency of mastery. Not one big win, not one lucky run, not one explosive trend, but the ability to show up day after day with the same calm, the same clarity, the same discipline. Scale out builds that ability. It is the habit that gives you the mental energy to face tomorrow without carrying the regret of today. It is the practice that protects your confidence from unnecessary damage. It is the act that allows you to remain stable in a profession defined by instability. Because the market will always be volatile, but you don't have to be. Scaling out is the bridge between external volatility and internal stability, between unpredictable candles and predictable decisions, between market chaos and mental peace. And once you understand this, once you feel the shift happening inside you, you begin to realize that scaling out wasn't created to make you rich quickly. It was created to make you unshakable. There comes a moment for every trader who stays in this game long enough when they finally understand something that should have been obvious all along. Trading is not about predicting the market. Trading is about managing yourself. The market doesn't know your name. It doesn't know your goals. It doesn't know your fears. It doesn't know your dreams. It doesn't know the weight you carry each time you click buy or sell. The market is indifferent, cold, unmoved, unemotional. Yet inside you there is an entire world of emotion fighting to take control every time a candle moves. And this inner world, this shifting landscape of fear, greed, hope, doubt, and expectation is the true arena of trading. Scaling out is the act that brings order to this inner world. It is the moment you say, I will not let my emotions dictate the outcome of this trade. I will not let fear control my results. I will not let greed rewrite my plan. I will not let uncertainty destroy what I've built. Scaling out is a declaration, a quiet, steady declaration that you are committed to your own psychological stability, that you value consistency over chaos, that you prioritize longevity over temporary excitement. When you scale out, you take ownership of the only part of trading you truly control your actions. Not the market, not the trend, not the news, not the volatility, not the direction of price, your actions. And those actions define your identity as a trader, not the wins, not the losses, not the lucky streaks or the painful setbacks. Actions. Small, deliberate, disciplined actions taken consistently over months and years in cycles of the market. Scaling out is one of those actions, quiet, humble, powerful, because every time you scale out, you reinforce the belief that your process matters more than your emotion. You strengthen the neural pathway that says, I follow my rules. You build the internal trust that says, I am in control. You establish the emotional foundation that says, I can handle whatever the market does next. Not because you know what will happen, but because you know you will act with intention regardless of what happens. This is emotional freedom. This is psychological resilience. This is the mental armor that separates traders who survive from traders who collapse. And once you taste this freedom, you never want to go back to the chaotic version of trading you once knew. You never want to go back to holding full size through every pullback. You never want to go back to watching green turn into red because you believed a fantasy. You never want to go back to exiting out of panic instead of clarity. You never want to go back to breaking your rules because your emotions felt urgent. Scaling out removes the urgency. It removes the panic. It removes the emotional weight that once clouded your vision. It allows you to trade with the calm confidence of someone who knows they don't need to catch every move to succeed. You begin to understand that the goal is not to be perfect. The goal is to be consistent. Consistency is the real wealth. Consistency is the real freedom. Consistency is the real mastery. And consistency is built through thousands of small decisions that honor your process instead of your impulses. Scaling out is one of those decisions, a decision that echoes into your future, a decision that shapes your identity, a decision that builds the emotional framework for every trade you will ever take. Because mastering trading is not about mastering the chart. It is about mastering yourself. It is about developing the emotional strength to stay steady when the market is unstable. It is about cultivating the patience to wait for structure instead of forcing opportunity. It is about building the discipline to honor your plan even when it feels inconvenient. It is about embracing the humility to protect profit rather than chase perfection. And when you live this way, when you scale out with intention, trade with clarity, act with discipline, and protect your psychological stability, a transformation happens. You stop being the trader who reacts. You become the trader who responds. You stop being the trader who is shaken by every candle. You become the trader who moves with calm precision. You stop being the trader who is ruled by emotion. You become the trader who is guided by logic. You stop being the trader who survives. You become the trader who thrives. Not because your strategy changed, but because you did. Trading mastery is not found in predicting the market. It is found in managing your mind. And scale out logic is one of the simplest, most powerful ways to protect that mind. So take what you've learned, apply it, practice it, honor it. Let it reshape the way you approach the chart. Let it strengthen the way you make decisions. Let it guide you toward the trader you were always capable of becoming. And remember this above all else: profit is not the goal. Control is. Control of your risk, control of your exposure, control of your psychology, control of your process. And when you establish control, profit follows. Not as a spike, not as a miracle, not as a stroke of luck, but as a reflection of your discipline. Take profit, protect your RR, respect your emotions, act with intention, become the calm inside the chaos, become the discipline inside the uncertainty, become the clarity inside the noise. Because in the end, the market rewards the trader who protects their mind as fiercely as they protect their capital. If there's one lesson to take with you, let it be this: your greatest edge is not your system, not your entry, not your chart pattern. Your greatest edge is your ability to stay in control while everyone else loses themselves to emotion. Scaling out is that control made visible. It's the quiet discipline that protects your future while your ego demands more. It's the choice that keeps your mind grounded when the market becomes unpredictable. You don't need to catch the whole move. You don't need to predict the perfect exit. You only need to protect your psychology, because a calm mind creates consistent decisions. And consistent decisions create consistent results. Thank you for watching this episode of Mind Over Markets. If this helped you see the market and yourself in a clearer light, then carry that clarity into your next trade. Remember, profit is temporary, but discipline is permanent. Trade well, trade intentionally, and above all, trade from a place of control.